probably the largest misconception is around this idea of safety. Using a solution that isn't bank owned is somehow less safe or less reliable than a tool that's offered by a bank, which is just like simply not the case.
So what would you say is the current state of the Canadian fintech industry, and how has it evolved over the past few years?
So I'd say that we have a albeit nascent but rapidly growing fintech industry here. Like taking a step back, Canada has a population around 40 million. About 95-ish% of those people are serviced by just 6 financial institutions, so 6 big banks. And that's really been the case for as long as anyone can remember. But we are kind of starting to see cracks, within that oligopoly a little bit. So there are, new players that are starting to emerge, to service Canadian consumers and Canadian small businesses and slowly biting off larger and larger pieces of the financial ecosystem. So, starting to see huge amounts of innovation within areas like lending and banking and capital markets, both on the consumer side and on the commercial small business side.
Many SMBs in Canada struggle with adopting fintech solutions despite their potential benefits. What are the key barriers that prevent these businesses from fully leveraging fintech? And are there common misconceptions about fintech that you believe contribute to these barriers?
For sure. I think that the biggest barrier is just lack of awareness. There are many businesses that are still using the tools that they kind of, receive when they open their bank account, which is okay. But, there's a whole bevy of fintech solutions that you can choose from. One, like slightly more nefarious one, would be often banks do make it kind of intentionally difficult to either adopt new fintech solutions or make certain technology decisions that would allow them to adopt, fintech solutions. The last one is also just, if you're a business owner, you've always done things a certain way, you'll always have a bit of a bias to continuing to, conduct your business in the same way, even if it is less efficient. And those are just like natural, hurdles that can be overcome with time. But, I think what's kind of important not to lose sight of, business, shouldn't just be adopting technology for the sake of adopting technology. There needs to be a meaningful business case in place. And really the only times you should be adopting technology is because it's, saving you a lot of time or it's saving you a lot of money. And then kind of everything should be downstream from there. That should really be like the guiding force in making any type of fintech decision.
Absolutely. And one thing I wanted to double down on, and I think you're so right about, is this relationship between SMBs and, the big banks. And not to throw shade towards our friends at the big banks, but they are very good and they have created a system that incentivizes their employees to sell services and products to SMBs that they might not necessarily need or even fully understand. So if you have someone representing this bank saying, hey, you should really use this product or service, it's hard as a small business owner to think, well, like, why would they sell me something I don't need? They're a bank. Of course they're here to help me. And that's something that I think people are becoming more smart to and more wise to.
Totally. I mean, like I said earlier, over 95% of all financial assets in Canada are controlled by 6 financial institutions, which means that Canadian banks are amazing at cross-selling services. They have these massive ecosystems and tons of different products that they can offer you. And they're amazing at kind of keeping you within those ecosystems. And so when I say that there is kind of like a disincentive for, banks to kind of lose control over their clients, it's in areas like this. If they're able to go and find cheaper or faster or better solutions in AP or AR automation, or even in point of sale technology that they're using, they're slowly, ceding control to competitors, and they're also losing on potential upsell opportunities. Like an amazing example of this would be Moneris, which is like a point of sale terminal. And the company is jointly owned by a consortium of a few of the biggest banks. And so when you go in, when you're opening a small business account at one of these banks, as a part of the package, you'll get one of these terminals, or you'll get like a huge discount to use one of these terminals, because the bank knows that they're going to make so much money off of those merchant accounts based on you being locked in to their system. So, and there are countless examples like that. Earlier you asked about kind of like what are like the misconceptions around fintech. probably the largest misconception is around this idea of safety. Using a solution that isn't bank owned is somehow less safe or less reliable than a tool that's offered by a bank, which is just like simply not the case. Fintech companies are also captured by a huge amount of consumer protection regulation. There are tons of financial controls at the policy level in place to make sure that fintechs are held to an incredibly high standard. Banks have done a very, very good job, both at branding themselves as like safe custodians of capital, which they are, and which is sort of the purpose of banks. But by the same token, saying that if you aren't a bank, that somehow you are less able to provide the same level of safety and control of things like consumer data that a bank would. That's a constant tension between regulated financial institutions that are in most cases not technology first organizations, and on the other side, technology first organizations like fintech companies that are incredibly adept at creating fantastic customer experiences.